Right, hello everyone, and just quick update from us on euro dollar below parity. You can see this has continued to trend lower over the start of this week and into the back end of last week, or over the course of last week. So euro dollar lower, euro weaker, dollar stronger. Now we have had a bit of a suspicious move over the last kind of half an hour. Euro dollar has popped higher 100 pips in the space of an hour here. It's not hourly candlestick's not even done, but over the course of this hour anyway, we've popped up back towards parity. Now that is a somewhat suspicious move, judging off the fact that there is no real reason for it. We've got a couple of data points out there, as you can see, in due course, but yeah, I can't really work that one out, really, to be honest with you. There's a little bit of an inverse head and shoulders there, but that's not going to drive a move like that, with that kind of aggressiveness. I'm not so sure, so I'm kind of undecided as to what that means right now. But in terms of what euro dollar below parity means going forward is a lot more interesting. You've got euro dollar, which you've got the dollar, the other side of things, and a lot of this move is driven by dollar strength, ongoing dollar strength over the last kind of year, 18 months. Same thing with euro weakness. Certainly over the course of this year, euro weakness has definitely played in a big way in this moving lower. Now the implications of that going forward for say companies in the US, thinking about US related assets, looking forward to Jackson Hole later in the week when we do get an update from Jerome Powell and what the Fed are thinking. Try and find some opportunities, try and isolate some opportunities. Euro dollar below parity means dollar strength. Dollar strength means that the US companies, their earnings from outside of America are going to be impacted by that. So companies do not have a good time of it when selling things outside of America, when the dollar is such a high valuation, and the fact that it's against the euro. Any European companies that these American companies do business with likely to have a bit of a downbeat reaction on the earnings front, which is important for US companies, important for the US stock market heading into the back end of this week with Jackson Hole. Now if that's going to continue and this move is going to continue and we're going to stay below parity, and this dollar strength is going to continue lower below parity, that has widespread implications across markets, across commodities, across stocks, across loads of different things. And when we come into the Jackson Hole at the weekend, you've got to imagine that Jerome Powell cannot come across too hawkish. If he comes down in hawkish and stocks start flying, commodities start flying, well, that causes increased levels of inflation again and makes the rate hikes or continuation of rate hikes a much stronger possibility. If he pours cold water on that fire and tries to come in hawkish to keep asset prices down and keep inflation down, which I think he probably has to do, that is definitely going to open up some opportunities with the ongoing weakness in the euro, ongoing dollar strength. If he has to pour cold water on any expectations for stocks or commodities to move higher, that is going to result in another bout of dollar strength. So that is definitely interesting going into the back end of this week. So this continues lower, or not this continues lower. If Jerome Powell comes out slightly hawkish, tries to pour cold water on stocks and commodities and keep those asset prices down, that's likely to continue this move lower and likely to drop euro dollar a good bit below parity. So does this figure up here hold? Could we sell it back up at parity, or do we think we'll get back above it again to sell it again later in this week? Remains to be seen. Got to see how price action unfolds around that level, but definitely is a significant level all the same.